Welcome back to Talk Tickers, the show where we break down the earnings calls that are really moving the markets. Today, we're jumping into OneWater Marine's fiscal third quarter results for 2025. And let me tell you, this was a report that had a lot of people scratching their heads for a very good reason.
So let's just get right to it, the central puzzle of the day. How does a company report lower than expected profits, but its stock price actually goes up? It's the kind of thing that makes you go, wait, what? So what did the market see that the headline numbers were hiding? Let's figure it out together.
And here it is, the paradox in black and white. On the left, you've got a really solid revenue number, beating expectations by nearly $21 million. That's great. But on the right, a pretty big miss on earnings. They earned just 79 cents per share when Wall Street was looking for $1.12. Normally, you see that combination, you'd expect the stock to take a nosedive.
To solve this little mystery, we have to look past those big, flashy headlines. We've got to roll up our sleeves and really dig into the details, because that's where the real story is.
Okay, so let's put some more meat on these bones. The revenue beat is clear, but that earnings miss, we're talking a nearly 30% shortfall. That's not just a miss, that's a big miss. And check out that gross margin line. It's down 110 basis points, or 1.1 percentage points from last year. All that tells us is that while they were selling more boats, they were making less profit on each one. Why? Probably because the whole market is just flooded with discounts right now.
And yet, this happened. The stock shot up over 5% on the day. So clearly, investors saw that profit miss and that margin pressure, and they basically just shrugged. They were looking at something completely different, something they felt was way more important for the future of the company.
And this right here is the answer. This is the heart of the story. It's all about how OneWater is navigating some seriously choppy waters for the entire boating industry. The two words you need to remember are divergence and discipline.
I mean, wow, this chart says it all, doesn't it? Look at this. The entire marine industry saw sales just absolutely plunge, down 15%. But OneWater, they actually grew their sales at existing locations by 2%. That's not just beating the market, that's lapping the competition. This is exactly what taking market share looks like in real time.
So you see, the key insight here is that investors weren't betting on the struggling boating industry. No way. They were betting on the company that is absolutely winning inside that struggling industry. And they're pulling it off with a really clear two-part strategy. First up, their pre-owned boat business is on fire, up almost 18%. Now, you might think, oh, that's just people settling for used boats because they can't afford new ones, but management says it's actually the opposite. It's an upgrade effect. People are trading in their old boats to buy new ones, which gives OneWater this fantastic pipeline of high-margin used boats to turn around and sell. It's a brilliant cycle for them.
And the second piece of the puzzle is just smart, disciplined management. They cut their inventory by nearly 14% from last year. You know, in a market that's drowning in discounts, having too much inventory sitting on the lot is an absolute killer. It just crushes your profits. By keeping things lean and mean, OneWater is protecting its balance sheet, and let me tell you, investors love to see that kind of control.
And the CEO, Austin Singleton, he basically spelled out their whole mission on the call. The focus is simple: outperform everybody else and grab as much market share as possible. They know things are tough out there, but they see it as a golden opportunity to really pull away from the pack.
Okay, so that's how they pulled off this impressive quarter. But the big question is, how do they keep it going? Well, management laid out a pretty clear game plan for what's next.
A huge part of that plan is something they call brand rationalization. Now, that's a bit of corporate jargon, I know, but it's actually a really simple and smart idea. All it means is that they're cleaning house. They're looking at all the different boat brands they sell and cutting loose the ones that aren't pulling their weight. This lets them focus all their time, money, and showroom space on the brands that are actually the most profitable. It's about working smarter, not just bigger.
So really, it all boils down to these three things. Number one, keep cleaning up that inventory and focusing on the best brands. Number two, keep a super tight grip on costs. And number three, use their massive size and expertise to just keep running circles around the rest of the industry. It's a simple, powerful, and focused plan.
And you can really see their confidence in the new forecast they gave for the whole year. Get this, in a tough market, they actually raised their outlook for both revenue and same-store sales. That's a huge signal. Now, they're also being realistic. You can see they lowered their expectations for profits, acknowledging that all those discounts are going to sting for a while. But the big takeaway is management fully expects to keep growing and taking share.
All right, so let's put it all together.
When they report again in a few months, what should we be looking for? Here's our take on what's going to matter the most.
We're watching 4 key things. First, how fast are they moving on that brand rationalization? Are they making progress cutting the weak links? Second, can they keep up that amazing growth in pre-owned boats? Third, and this is the big one, margins. Do they finally stabilize, or do the discounts get even worse? And finally, we'll be listening for any news on whether the boat manufacturers themselves are getting back to normal production.
So, our final verdict here at Talk Tickers, we're rating OneWater a market perform. Look, the company is executing brilliantly. They're grabbing market share, they're managing inventory like pros. It's really impressive. But you just can't ignore the severe margin pressure coming from the entire industry. So until we see a clearer path to profit recovery, we expect the stock will probably perform right in line with the broader market.
And of course, as always, a final reminder, this is not financial advice. Our analysis is just for informational purposes. Please be sure to do your own research before making any investment decisions. That's all for this edition of Talk Tickers.